Hello viewers, welcome to this weekly analysis of Nifty index. So to start off from where we left the last week analysis, so the previous week analysis, the previous week's candle on Nifty was a very strong bearish candle engulfing almost 3 weeks activity. So at that point, I mentioned that you can look at the previous week's analysis if you are missing this, that there are strong supports below this candle, and these supports might play out, and the bulls may be holding their last stand when we have to see what happens as the week closes. So now that we have a closure of this week, the candle is looking like it got support from the lows. The support coincides with the moving average support that I have mentioned in the previous week's analysis. Also, now that the candle is taking support and the body is green, so what does this look like? So to understand it better, we have to consider the context of this candle. So one thing that we have to notice, the opening of this candle. The opening of the candle opened almost at the lows of the previous candle. It didn't open much beyond that. And we have a bottom wick which indicates support. And the body of the candle is closing into the body of this previous red candle, which is a strong bearish indicator. And one more thing to note is, given that we have three three of the previous weeks trying to go above after another bearish candle, and that followed by a strong bearish solid. The candle is almost solid because there is not much of lower wick or a top wick. So this candle is usually called a belt hold candle. So what a belt hold candle means is that the top of the candle, which falls slightly below 18,000, becomes a very strong resistance. And even we don't need so much of technical information to understand that 18k level has been tested multiple times, and now we are below that. 18k naturally becomes a strong resistance level, but this candle also confirms that. So now that we have a green body, does this indicate a rally is the question. Well, so to indicate a strong bullish action, the candle should have been something slightly different. The candle should have been like this rather than having this much of lower wick. The candle should have been solid, starting at a much lower level and closing a little more higher, at least to the half or beyond. That would have made this week a very strong bullish move. But this the present candle is not a strong bullish move. To understand that, you have to look at the daily movements during the week also. So the week started off slightly lower and tried to go down, but it got support. Eventually closed. The first day closed slightly higher. The next day also the price is pushed down, but that followed with a sharp rebound on Wednesday. On the weekly expiry day, that is on Thursday, we had another sharp down move, but the support at 17,300 levels halted the down move. Now towards the last day of the week, that is on Friday, we had a very sharp strong rebound, closing above 17,500. So given that there were so many attempts at pushing the price down, but they hit a support here. So one thing we had to agree is the support acted, and support acted very strongly. But then this is not a very convincing bullish up move. So given the momentum is like this, there is a possibility that the momentum may continue. but it is going to hit resistance somewhere here, 17,700 level, or yeah, if the momentum is strong enough, it might go up even higher, and there is a even if it goes up to here 17,770 level, uh, this bearish gap will act as a resistance. So there is a good chance that because the momentum is looking very what you say aggressive, there is a good chance that the first 1 or 2 days of the week may move up, and we may see a fall after that. So we can have a look at the monthly candle also, because the monthly closure happened during the last week. We'll get a different picture from that. Looking at the monthly candles, so it's interesting to note that each of these three candles have opened within the previous body and closed below that. So this is indicating a consistent downtrend. And interestingly, the March candle also opened within the body of the February candle, and now it is moving up. So we don't know when this is going to reverse, but it is going to reverse, and when it reverses, we may see a sharp push down, and probably it can go lower than the February candle also. So there is a fair chance, looking at the candles, I would say there is a fair chance that if the reversal happens, the reversal might possibly hit a support somewhere here, which is 16,800. So we may see a test of 17,000. We don't know whether March will close below 17,000, but there is a possibility that we may see some an attempt at closing below 17,000. We don't know what will happen, then we have to wait and see. So that is about the monthly outlook. So the price action on a weekly time scale as of now looks to be in a bullish mood. Weekly time scale looks to be in a bullish mood, but this is not a very strong or convincing bullish up move. So if you want to stay long in this market, you can stay long as long as there is some bullish momentum, but then you have to anticipate a reversal at any point of time. So stay long with good strategies and a risk management setup. And if you spot a reversal, then it is a good moment to short, because given the previous trend, there is fairly good enough chance that the reversal can go and close below these supports when it is coming down. Looking at from another perspective, so this is also on a weekly time scale. This is the 50 DMA that I spoke about last week. So that offered support here. The 50 DMA offered support here. So here during the lows of June, 100 DMA offered support, and now the 100 DMA is also coming up here, and the 100 DMA is like above 16,800 level. It's almost near to 17,000. So when the price falls, it might take away 50 DMA, and if the momentum is strong, I am not going to say that the price will take away both of these things at the same time. It may happen sometimes, but usually what happens is it will take the 50 DMA and it will give a test of 100 DMA and close above, and if that happens, the next week may break below the 100 DMA. So looking at the moving averages, this is the picture that we can infer. And let us also see what Fibonacci retracements can tell us. So I'll draw a Fibonacci retracement from these lows to these highs. So at this point 17 when it earlier tested 18,100, there was a small correction, and that came up to 0.5% retracement level. Basically it tried to go up to 0.5% retracement level, and then it rebounded. So it rebounded up to this level. Now we had a close below 38% retracement level, and the 50% retracement level is coming to 17,050, and that is coinciding with the 100 DMA. So this level also may offer some support when the index comes up to this level, 17,050 level. And let me close this. I'll draw a retracement from this high to this low. Let us see what it tells. Okay, this is interesting. As you can see, okay, this is very interesting. Okay, how do I, okay, you have to manage to see it. Okay, fine. I hope you are able to notice this. So the weekly candle, looking at the retracement of this whole section, it has come and tested the 23% retracement level. So at this point, if it breaks, there is a potential for the weekly candle to go up to 38% retracement level, which is 17,884. So that can happen when this retracement level is broken. If so, if the next week's candle, that is on that is a candle for the second week of March, that can give a test of above this also, it can happen. But what the important thing we have to notice is, if it closes below this level, the 23% retracement level, then this may not happen. We may expect a break of its lows. On the other hand, if we see another green candle closing above, or in that case it can even go up and test this also right away. That also can happen if the momentum is strong enough. So what is going to happen? We have to observe during the next week. So that is something we can infer from this particular Fibonacci retracement. And what else? So I think I have covered pretty much everything. Yeah, so one more thing. Looking at a daily time scale. So this is the 200 DMA, this line. So that has been broken uh, both left and right multiple times. So this 200 DMA is not so much significant at this point, because as we can see, it has been um, broken left right multiple times, so it is not a very significant level. So the 50 DMA will be a level to watch for when the price reverses and starts falling. And so that's it for the week ahead. So the outlook as of now is bullish, but then we have to keep and look out for a reversal. We don't know when that is going to happen, but when it happens, there is high potential for the price to break the lows of this March or February. So I hope everyone will have a good and interesting week ahead. So manage your risk well. So stay sharp, and I hope everyone will have a good week ahead. So if you like this analysis, the one I am right now giving, so do subscribe to the channel, share the analysis with your other trading friends, because most of the channels basically they try to sell off things during the analysis part, and they don't give out proper analysis. They include all kind of nonsense theories into the analysis. So whereas I usually stick to the technical part of it only, without going off topic. I try to be objective. So I try to give a proper solid technical analysis. If you do like this, do subscribe to the channel, hit the bell icon for regular updates, because I will be giving out daily analysis of Nifty and Bank Nifty as well. So you'll be getting updates regularly. Thank you.